Okay, hello everyone. Let's get started. This is me, Guillaume Lambert. Unfortunately, Rosalie is sick, so she won't be able to join us for today. That's fine. I'm still gonna talk 10, 15 minutes about the portfolio that Intern has been managing for us. See how their portfolio P&L responded to the latest price drop we've seen this morning. The second half of the show will be Brandon joining us to go over the best and worst trades of the week on kind of multiple markets in Panoptic. And yeah, it's always fun to try to do this on Friday, not making too much fun of the bad traders, but rather try to make this into a teachable moment. So everything you see here is not financial advice. We're just doing this for a way to discuss options, discuss trades, have this be maybe a reference point for some of you guys to know where to get started. But again, nothing we see here is financial advice. I'll go quickly over the markets, which have been kind of maybe not very good looking over the past few hours. This is what the price looks like. Again, lots of red. This is kind of expected. Sometimes crypto goes up or down. A lot of what we see is that the ETH and BTC both went down quite a bit. This happened over the last 24 hours. Early this morning, big drop. Keeps going down. We're testing 1875 on ETH, which haven't, I mean, we've seen this maybe a few days ago, but it still hurts to see. Again, we had a good run for a while. The lowest it's been over the past 2 weeks, a month, is seems to be 1800. So we'll see if we push this. Again, price moving up and down. It's hard to keep the faith, but yeah, there's an option trend for that. One thing I wanted to look as well is the Bitcoin price as well. It's been going down. Not as sudden as we've seen for ETH, and also it seems to be kind of a bit more progressive. Still testing very some of the lows, but still kind of the whole market seems to be down. I'm trying to show both the ETC and BTC markets because there is one way to trade the ratio, which is what I want to go on next. Because the intern portfolio, this is Rosalie and I are discussing trades. We discuss what I would do or what she would do, but then the intern decides to carry on these trades. One thing that we are seeing now is that some of the profits we had in the ETH/USDC pool has evaporated a little bit. We were, I think, up 100-ish dollars. Now we're up $30. The two positions are very similar, but let's go over the first one. So when you see the market crash, you just want to see your current positions and your P&L and try to see whether you're in trouble or want to manage this. This one, again, it's one that is working perfectly for what we want to do. So here we started delta neutral. Price was 2200. We set it up right in the middle of it. And price has been going up and down. And now it's actually testing the lower end of the price range. It's still in range. So we're still collecting fees. If you look at the premium over time, it's still going up. There might be an uptick now because the volatility in the markets means more people are trading. But here it's maybe scary a little bit. We're about to leave the range, but thanks to the fees collected, almost 7% of fees in 22 days on notional means that even if the price were to leave completely the range, would still be in the green, would still be making money. Again, most of it is the fees are there to compensate for the risk we take on. If the price stays in that area, we collect more fees. But if it leaves, this is when we may want to trigger a rolling or closing it or doing something else. So in that specific case, what we see is that the strategy is working okay. We're wrong, but we're still making money. This is a constant theme for options trading. So that is maybe a good point to stop and maybe redeploy, capture that $50 of profit on one trade. The this is an old one. The P&Ls don't align too much. Sorry, there was a bug that was pushed last time. But yeah, both of them are making money, even though we were wrong. We thought it was going to stay stable. It moved. What can we do in that case? We just have to manage this, and it might be a good point now because of the price move. Capture or secures those gains. Another one that I wanted to look at is the ETH BTC ratio. This one is one ratio that keeps going down, it seems. What Rosalie and the intern have done is that they are betting on the ratio going down. And even though the price of ETH and USDC have been going down, what we want to see is the ratio. How is that moving? Is ETH impacted as much as BTC or vice versa? It seems that since that downward trend in price is matched with a downward trend in ratio. That means that unfortunately ETH has been underperforming BTC. Again, BTC has a lot more volume now with ETFs and everything else. So what we see is that ETH has a higher beta, maybe more responding to world events. But that works for us. We had a negative delta trade. We started the price was 0.025. Now it's 0.022. Price going down. We're earning fees. We're earning also delta, if you want. It's going in our direction. This one earns 20% in, again, 21 short days. So that is one trade that is working very well for us. Uh, I'm almost tempted to keep it on, because what you want to see is uh, as the price keeps going down, you exit that high delta region to be flat. We want to maybe capture this a bit earlier, so that maybe point 0.2 is when you start seeing diminishing returns. But hey, it looks like it's still in a good area. I would not maybe close this, just milk the volatility, milk the price action, and collect more fees. Again, 5% of fees and another maybe 14% of price moves means we earn 19% of that position. So very, very good in terms of P&L. Let's go to the last one, which was a delta neutral trade. I think we're fine because we set it up. Okay, not quite fine, but that's fine. This is another trade we've made. A lot of what we want to see in, oh yeah, this is good. In options, that you may have more than one trade in an underlying. You want to diversify your strategy. You want to have more than one kind of outcome possible, so that your whole portfolio is what you hedge and not a per position type of trade. Here, this is what looks like a delta neutral trade. This is a straddle, selling a put, selling a call, but we did it in a way that was offset. So when we started this position 5 days ago, we were in this negative delta territory. We were expecting the price to still go down, and it did. So we are accumulating returns on the price action, because this is a negative slope. Price started 0.024, now 0.022. Directionally, we were right. And also, we're earning fees on top of that. And we haven't necessarily breached the plateau here, where if it did go down quite a bit, we would be losing. So this is another one of those trades that seems to be working very well for us, where directionally we're right. We're earning fees every block that there's a trade, which is also great. And we are in a point where we're earning, again, 2%, but that's 2% of the whole position size. But it's working for us. There might be more potential for returns if it keeps going down. But if it were to go back and forth in that range, you're in range, you're earning fees. That's another trade that is actually, again, masterfully dictated by Rosalie, masterfully carried out by the intern. This is another trade which is neutral to bearish. We've seen a neutral to bearish sentiment over the past 5 days. This is working as it should. So yeah, bravo. This is also another one of those trades that you have to trust your gut, and then when you do, sometimes you create the right trade. So this is BTC and ETH. Both of them have been successful for us. Let's quickly go to one of the meme coin, which is Ticker Bitcoin. Ticker Bitcoin is printing now. It's exactly the best trade that, again, we've carried through. It's Ticker Bitcoin, whether it's Ticker Bitcoin or real Bitcoin or even ETH. There's always a trade for that, and the type of trade is, again, you would manage it the same way. You would the entry point, exit point would be the same. But in that case, we were delta neutral. We're back practically where we started. And then the whole time we spent it in range, never breached either side. It's been choppy for Ticker Bitcoin, but we entered it at the right place. It's been choppy ever since. And with the collapse that we've seen, it turns out that Ticker Bitcoin was very correlated with the price, so it's not diverging too much. So one of the best outcome is that we stayed in range the whole time. We're back to the beginning. I would say either close this and earn your 8% profit in 15 days. Again, if you want to analyze this, this is very juicy. Or you keep it on if you're still neutral. I would personally say it's one trade that worked very well. We're making 0.007 ETH. So that's what, maybe $15, but on a very, very small position. It could be a good time to close it, move on, realize these profits. So again, no one is buying it. either, so it's easy to close. If not, you would earn more fees, so that might be a reason for staying on. But yes, currently, great trade with the ticker Bitcoin ETH. Delta neutral at inception, still delta neutral. If the sentiment changes, it would be a good time to close. But nah, I would say that it currently might be worth to secure these profits, deploy either a different pool or a different strategy, given what you're feeling. But yeah, so that's the P&L of the portfolio of the intern, aka the Panoptic intern. So all of their positions are positive. All of them are earning fees or earning streamia. The risk is it's all selling options. So again, the goal of this show, I guess, and the Panoptic team is to one, make sure that Uniswap LPs understand that trading options, selling, providing liquidity is like trading options, but it's selling options, not always buying options, which is more speculative here. We're kind of conservative in our strategies. All the strategies have been working for us, so there's not much more to do. And I would say that again, following what we've done over the past 2 or 3 months now, it's actually very. I'm happy to see that it's working the way we intended. So that's kind of the goal: make a bit of money, but understand all the risk, but also manage it properly. But yeah, so that's it for today. I was picking. There's one portfolio that I wanted to look at, which is trading a few Bitcoin options. Yeah, let me see. This is we I peeked around. You can spy on other people. This is a different portfolio, spectating someone else. We don't we do the ratio ETC, but this is one BTC USDC, and I wanted to have a peek. But this one as well. Price moves, maybe they're in trouble. It turns out all of their positions, which seems to be very delta neutral in nature, are making money. All of them have positive streamia. One that I want to maybe highlight is that this one in particular, this is a put option that's being sold. This is normally a bullish trade. The strike was 82K, and it was minted when the strike is 82K. It was minted when the price was 97. So that position lost in their directionality. The minter was wrong. They thought the price was going to go up. It did go down by quite a bit. Normally, you would lose money if you buy an asset and the price goes down. In that specific case, the fees compensate and offset practically all of that risk. So that even though the price went down, in that case, close to 10%, they're ahead 1% in terms of profits, because that shape means that they lose less on the directionality, and they also earn fees on the way down. So even though that position is 0.05 bits, so maybe 2 ETH worth of 1.5 ETH worth of no, it's actually 2 ETH worth of position sizing. Sorry, $4,000 worth of position sizing. Price went down 10%. They are making $40. So that's a very another example of making money. Even though you're wrong, you get paid for that risk. That risk was kind of managed well, whereas they still making money, so they don't need to change it. But yeah, this is the bet on a trade that you think the price is going to go up. If it goes down, you can still make money. So that's a slightly kind of interesting outcome as well. BTC does go down. Those BTC traders, even though they were wrong, can still make money. So I guess that's it for now. I'll add Brendan here to the chat, but this is a lot of what I do most days, even in the day like today, where price goes down. You don't need to panic. You don't need to go on and trade 25 times like a perp. There is some flexibility. There's some grayness to it that makes it that you don't actually have to be actively trading, but then you can be relaxing a bit more. But yeah, hey Brendan. So this is first part. We'll wait for Rosalie to maybe guide us what to do next. But yeah, for now, this is kind of what we have done. And yeah, Brendan is here for the second half, which is looking at the best and worst trades of the week.
Indeed. And to talk about that, we do have to talk about the price movement. We have a comment here, I think, earlier when you were talking about all the markets being down. So show that comment from Darren here. Time to start LPing on the Pax Gold USDC. We're going to boomer on chain. Love it.
This is also, again, tokenized asset. This is real world assets. Tokenized gold, tokenized US dollars. I could trade the GLD ETF on my trading account, but yes, maybe I'll do it on gold USDC to just tap into that extra maybe revenue source, which is um, what we've seen from the research. Even a lot of Uniswap's volatility is less efficient, more opportunities for trading and profiting. But yeah,
Well, so we're up on gold on the month, almost 9%, 8.5%. On the
fight to
monthly on ETH,
safety.
we're
Yes,
down 12.3%. So there's this whole topic coming out about, is Bitcoin and ETH, are these risk on, risk off? I think the BlackRock COO or something came on the news and was saying these crypto people keep saying Bitcoin is this risk on asset. We need to stop talking about it that way. I don't know how much people talking about things affect the markets. I guess it's part of the mind narrative, but so far it seems like what are your opinions on the major crypto assets? Are these behaving like gold, or should they behave?
no, that's right. They're not as neutral as gold, unfortunately, and they have. I mean, someone talks about it. You have a not politicized, but there is some level of kind of human element to Bitcoin still, Ethereum even more, even though that makes them a little bit more separate. You cannot FUD a commodity like oil or corn or gold because it is what it is. You could still FUD ETH and BTC if you really tried to do it. It's still not as established. So that's why I say it's not the safest bet, even though it seems to be very critically neutral. There is this kind of human element that is kind of making it more correlated with assets, market sentiments, macros in a way that gold and equities are a little bit more kind of orthogonal in their price move.
There's no like company reports, quarterly reports, CEO things behind Bitcoin. So what is the human element that you see?
Do you trust it? Some of the statements about Bitcoin reserves, some of the fact that you have, even Bitcoin. I think even the ETH argument is that even the long-term sustainability of Bitcoin relying on fees could be something that may make it not as good as it looks in 100 years. So there is some level of like human involvement. Just even I don't know if the Bitcoin core devs team were to be hit by a meteor, it would crash BTC in a way that a big gold miner going bankrupt doesn't impact the price of gold. That's my point. It's still a bit more grounded to the human and kind of people world, and a bit more less than gold.
Interesting. Well, the markets are down for crypto. ETH price on the weekly, we went a bit up in at the middle of the week, but this morning, I think so. Asia trading times, we saw a big drop below 2,000. It went from 2,000 to now under 1,900. So on the weekly, we're seeing down slightly. So with that in mind, we are going over the best and worst trades on the ETH options markets on both Mainnet and Unichain. Mainnet, we see some bigger trades going on. Unichain, we see some more smaller, frequent trades going on. So we'll cover the best and worst from the week. So yes, which one do you want to start with? Do you want to start with the best trades or the worst trades?
Let's do the worst trade. You probably kept it up to date as again 6 a.m. my time. There was this crash, so that is probably what this comes from. And yes, I'm learning from my mistakes over the past few weeks. I'm now more convinced than ever that the best trades. Oh, the worst or best? Are we doing? Sorry.
I think we'll start with the worst.
Yes.
So
okay.
What are the worst trades?
A lot of what we see is the sell side. Those that sell put options get hit the hardest on downward moves. Those that sell call options are the ones that benefit the most on the upside move in that case, or downside move. And because the size of these trades is also much easier to scale when you sell than buying. So yes, I would say put option seller might be all cases the most impacted. So two put sellers, both on Unichain and Base, got wrecked.
On Ethereum, yeah. So
selling puts. Base. Why did I say Base?
Yeah,
we're not on Base. Who knows? Okay,
maybe one day.
No.
So selling puts, it sounds like, is your prediction for the worst trades. We'll take a look at Ethereum first. Let's see if I can pull that up. They all look the same on my little preview window. So let's see. Okay. So you nailed it. We have a short put here. So that's selling a put, which is a moderate to bullish strategy. So given the price started when this position was open, the price was 2089 for ETH. And the price is currently, well, the price was this 1910. It's even lower now.
Yeah, I was gonna say someone saw this coming, maybe stopped the leak a bit earlier because now the price would be even worse and worse P&L. But yeah, 8 hours ago, this was a short time scale for opening and closing. But yeah, they respond. They were on top of it.
Yeah, they kept it open for 4 days. They're very reactive. I think they put in a stop loss pretty much, a mental stop loss of when it went down. Maybe they were aiming for this 5% loss or something. But they cut their losses short here with this put. Of course, these puts do well when the price stays the same or goes up. They do less well when the price goes down, such as the nature of being on the sell side of a put. They were only able to collect a little bit in premia here.
And can you show the premium? Yeah, chart.
Yes.
Yeah, it's going up, but maybe not fast enough for sure.
Yeah, and this was a monthly option, so it's going to collect less premia comparatively to like a weekly or daily option. And so the fact that the price just went against them so soon on their trade is going to mean that, they could have, if they had held this longer, they would have collected a lot more premia. But I think in this case, it makes sense, not financial advice, but they just took a big hit with the directional change in the ETH price. Do you have any recommendations here, or
I mean,
what you would have done?
The conviction to some extent. If I were to try to put on a monthly time scale, then I would trust my instinct, even though it goes down. I mean, you have to revisit your assumptions. So the person really realized they were wrong, but not just kind of. I thought it's bullish, but it's neutral, but wrong in terms of, oh my god, it's bearish, so I might as well cut my losses. But I would say that again, I would be a bit less trigger happy with that, and I would hold it. You're basically buying ETH, and again, you may have some ETH exposure already. This is kind of maybe buying at the wrong price, but if you were to go out on Binance and buy it at 2100, it did go down. So again, it's fine, but yeah, I would advise to let it go for a while. Maybe it's gonna bounce back, or maybe it stays in range. And if we were to zoom out, the lower price range was still pretty low, right? Yeah, 1750. They were a bit in range, but yes, I would say that I understand the thought process, but I would be a bit more comfortable, even myself, to keep it on and maybe set a call, reduce the size. In the equity world, you set a put option, and if you're wrong, you don't close it. You set a call against it, which is a weird way to say that you assume this put option is gone, and you purchase the stocks. You have the 100 shares because it's in the money. It's going to get exercised, so might as well set a covered call right away and not wait till expiry. But you said that's kind of the thought process where I say, I'm wrong. I'm taking responsibility for that wrong thing. But what's the next thing to do? I'm still bullish. Let me set a call, covered call, like that adds more premium. That adds a bit more flexibility, makes it a bit more neutral. If you were bullish, it's better to be neutral than say flipping to see be bearish. So this is kind of intermediate step. But yeah.
And this put started out slightly in the money.
Yeah.
Is that like is it safer to start it at the money instead of starting it in the money where it has a higher delta? The price goes down, it's going to be
something. I would be a bit out of the money. Be the strike could have been a bit lower, and it meant that the losses would be a bit smaller. Again, I don't want to if you're in the money, you're a bit more convinced of your assumption. So again, I would say maybe they're still right. Maybe it's going to go back to 2400. But yeah, so that's why I personally trade delta neutral all the time, because I'm wrong so many times that I say I'm going to be in range mode. And yes, there might be a huge market collapse and I'll lose, but then 95% of the time I'll be able to make money out of that and not be worried about price moves.
Interesting. So if you're trading delta neutral, your confidence level is what? It's a delta of 0. Does that mean your confidence level is 0, or what? What does it mean?
That's right. No conviction. I did post even now a Twitter thread about like delta neutrality in options. It's a bit different than what you think about in terms of like carry trade or even Athena, which Athena is 100% delta neutral. Whatever the price, you don't get exposure to the transaction. It's just the funding rate that you're kind of getting return or maybe pay out of. Here, you are a bit more dynamic. You need to hedge maybe or have different assumptions. But yes, I would say that I've given up trying to predict the price movement. I'm always neutral and harvesting volatility, which can go up or down, but then you benefit in whichever way it goes, as opposed to try to be right. Yeah, it's hard to be right when it's a coin flip, basically, from day to day.
Interesting. Well, this user was closer to about 60% confidence in their original delta.
Yes.
And that's what happens when you're confident but wrong. At least they got a little bit of a buffer, and they're not going to do as bad as holding ETH.
And again, they have 2 ETH worth of exposure, and the price collapsed. I don't know, 10%. So 2 ETH, 10% would normally be like $400, and they only lose $250. So it's less. So it's still a better trade than just buying, I'd say, and selling right away. So yeah.
Yes, options give you a little bit more buffer room. So, okay, well, I think that was very helpful analysis, and we'll switch over to the worst trade on Unichain, which I believe you also predicted to be a
Yes.
put seller.
I still hold that. Yes.
Okay, let us take a look at the Unichain position here. And you are correct. You're 2 for 2. Happy Friday. Great job here. This was a put that was put in just over a day ago, though. Yeah, the price was also over 2,000 a day ago and is now below 1,900.
Are they still in range? Do you mind clicking on it?
We see this big red flag out of range, and if you look, their range is 1935 to 2460. So they're not earning premia in Panoptic anymore on this option. So the price has to come back to 1935 before this position will start accruing more premia. Yeah. So they're kind of capped out. You'll see this cap off here as of earlier this morning.
Yeah, but they still have it on, and it's a 1-day trade. Normally this can last 7-ish days if it's a weekly option like now. Yes. And yeah, maybe this is now 100% delta, meaning that you're owning ETH. This was 1.213 ETH worth of exposure. You're at that 100% delta. Oh, I don't. Oh, it's 0.
Bug here. This is
yeah, exactly.
One delta, right?
It's out of range, maybe. So that is maybe you set a call against it. You do some other trades that allows you to still make money, but yeah, since it's out of range, again, maybe the person needs to wake up. But yeah, it's fine. Again, 1.2 ETH worth of capital exposure. Price went down 20%, 10%. You lose 6-ish%. It's again a good trade off. But yeah, I would say that this being out of range is slightly different than the other one. They may be forced to close and redeploy and kind of move on with that loss.
Yeah, I'm just looking at the timestamp here. Looks like they're trading around what, like 5 a.m. Eastern or something? 5 or 6. So you're either an early riser or time zone than the US.
Yes. Now it's night for them, or at least dinner time. You do your appearance. They take it forever to eat. So
yeah, but if they're in Asia time zone, they would have seen that big drop.
Maybe so.
With the weekly, I guess they're hoping for it to go up. So what's not financial advice, but what's your recommendation then, since we're totally in the money when selling a put, which is a bad thing? Is it to close this position, or is it to open up a short call like you were saying earlier on the other position?
Yeah, this is out of range, and now they can close the whole position. If people had bought it, they can force exercise, so it's easy to get out of that trade. So I would say maybe close. Again, remember, the price went down 10%, you lost 6%, so it's still fine. You should just have to maybe redeploy. If you're still bullish, you may have put as well, but redeploy your capital that doesn't sit idly there and getting one-to-one kind of exposure. But yeah, it's fine. These things happen. Price move.
Yes. unfortunately. They were
participate.
also
Yes.
probably around 80% confident to start this off. Looks like
Yes.
the delta would have been around 70 or 80 there.
Yeah. I mean, they may have other offsetting positions, and maybe they have like um, enough that they can still maintain that. But yeah.
Yeah, and I mean, maybe this is just a small portion of their powder here. A lot of people have been asking what this effective spread is here.
Yeah,
In
we have
penalty,
too many terms. It's like weak or effective spread. So yes.
yeah. So So the V here says 1.00x. That is the same thing as what's being shown
Yeah.
here. This spread. Can you just quickly go over what is this?
Yeah. If you
Uh,
click on the 2182 strike, so there's a button actually at this. No, the
oh
yeah,
yeah. Mhm.
we can show who's part of that trade. In that case, on the put side, which is on the right, there's only one seller.
And
And
this is
if
cool because they earn some premia even though no one's buying
yeah,
them.
yeah, actually, you get paid even if no one buys your option. So you sell, you get paid on the fees generated in Uniswap. They're the only one there. So if there were other sellers or buyers, you would see more action there. But since they are the only seller, they get 1x or exactly what the Uniswap fees are. And
So
it
these
goes
were the
down. They get
Uniswap
paid, yes.
fees. These $3, right?
Yeah. So they earn, again, uh, $3 on a $1,500 position, or maybe 2,500. So it's
Yeah, it's
one
like
day and a half into it, or less than that. So it's not much, but is the earning fees? It's 1x what the Uniswap fees are. If you sell and someone else buy it, you get more returns. You get 1.1, 1.2, or 1.01. So you get more than the Uniswap fees because the buyers now pays you. They are willing to pay you more than the Uniswap fees. Maybe it's cheap. Maybe they're also, in that case, bearish and they want to buy put options. They would buy it and pay you more. So that's the flip side of it. So spread is on the IV side, implied volatility side. And if you have 1.00, you're trading the realized volatility because it's all realized trades.
so we want to see this spread go up as a seller because you're earning
Yes.
more. And unfortunately, when you're out of range, this big label, you're basically your spread is now zero. You're earning nothing. Kind of a quirk of the Panoptic Uniswap LP ecosystem, but it's definitely something to understand when trading.
Yeah.
So, okay, well, great help there. Not financial advice, but appreciate the tips on managing this put that isn't doing so well with the recent price drop this morning. Let's switch over to the good news. We'll look at the best positions. Do you have a prediction on what the best trades might be on Unichain and Ethereum, ETH markets?
Yeah, I'll do a call option, selling a call option on base. Oh wait, on mainnet. And actually yes, and then do two call options, so same as before. A lot of what we see is that the options buyers are very bullish and they buy call options. And if you're wrong with a call option that you purchase, you don't lose as much. If you want to make money, you would buy puts, but we don't see that often. People are not risk managing as much. So I would say that those very successful traders will probably delta neutral given the price move, but on the sell side, two call options sold.
All right, so you're going with buying a call option, which, as we know, when you call up your girlfriend, she puts you down. So call options do well on the upside, but you're saying sell a call option, so they do well on the downside. So
Interesting. Yes.
let's switch over and look. You're 2 for 2. Let's see how you did. Unfortunately, you were close. It is a put
Ooh.
option being
Okay.
purchased. So the hedger indeed has taken it home this time on mainnet. And this trade was opened just about 3 days ago.
Oh, someone knows something.
Yeah, they're very, very timely. They opened this maybe a day or two before that price drop. They were at the strike 2080 at
Yeah.
the money. The
So
price
they're paying quite a bit. So they bought into, so the spread multiplier now is higher. But yeah, they were willing to pay more for that direction assumption, and it paid
yeah,
off for sure. Yeah.
it looks like they took out a big chunk. This is a popular
Oh, I see.
contract, though. So
Yeah.
there are other people buying it up, or at least did buy it up, pushing that price. So they're paying almost 50% more in Uniswap fees than what what the normal Uniswap LPs would be earning. They're a
But then they
premium.
paid $25 for a 600. So this might be even a I don't want to kind of give financial advice, but the biggest bang for your buck, if you knew the future and you know it's going to go down, then yes, that buying a put option is extremely capital efficient, and it has the ability to get paid. And in this case, this person is controlling $12,000 worth of liquidity, and they only need $1,000 worth of equity to kind of back it up. So it's extremely capital efficient. It
10x.
moved as it should, and they're making a lot on the capital there. So yeah.
Yeah, it's pretty crazy. Is 10x leverage position. It might look like this is only a 2.8 contract, but they actually changed the quantity on the leg to 2x.
Oh.
So effectively, this is closer to what is this? Almost 6 contracts, ETH contracts. So here, all our percentages are on the notional, but on their actual collateral margin requirement, they're making 50% profit in 3 days. So annualized is something crazy, like times 100, right? 500% gains on this annualized.
All right. Yeah. So this is one of those lower probability of success, but timing it right and maybe now closing it with securing that profit is. Are they still in range? Maybe let me see. Just 1 second. Yeah. So they're still paying. So even though it stops moving or stays back and forth, they would be paying more premium. So again, I would say be happy you got a good trade, close and move on. But yes, great. First time we see a put, I think, or at least one of that magnitude getting so much returns.
And how do we interpret this delta? I think on our app, it's being multiplied by the contracts in quantity potentially, or maybe just the quantity.
Oh, yeah.
Is this a 70 delta option or something less?
Yeah, now it would be 70. The put side is or the buying side, it's negative. It's a weird thing, but yeah. This is a 70 delta. So it's
So
almost as if you're
$1
holding these 6 ETH, I guess, or short 6 ETH.
Yeah, I mean, I think, yeah. So this is more like for every $1 drop, for every contract you have, you're going to make 70 cents on the dollar. They have about 6 contracts here, so they'll be making 6 times 70 cents per dollar drop,
yes.
Right? All right. Well, sweet, great. I don't want to call it luck, but maybe this person had some good insight here on this trade and was rewarded
And
quite
could
well.
be as simple. So the what we do with Panoptic is that we accept both sides of the collateral. We accept ETH and USDC. And unfortunately, what we're seeing is if you have some ETH in your account and the price collapses, your net value goes down in a way that you don't necessarily trade badly. It's just the price goes down. And maybe again, I haven't really pushed this, but buying puts makes you maybe lose less. If you have 6 ETH worth of collateral in real ETH terms, then you buy 6 ETH worth of protective puts, and you're hedging out that side of your PNL at the cost of, in this case, $36, which is cheap. So yeah, maybe we should see a bit more put buying in Panoptic to secure your own kind of balance.
All in one place. You can
Yes.
hedge your own collateral. Yeah, I think we have some.
Maybe I'll do it. I haven't thought about this, but this is actually a good use case for buying puts, not just because you think it's going to go down, but you protect yourself against the ETH side of your collateral.
But in Panoptic, we have different margin types. You can bring ETH, you can bring USDC. I think we recommend you bring a little bit of both, but a lot of the one that you care more about. So you could still just have a little bit of ETH in your collateral and mostly fund your account with USDC, right? And kind of be neutral.
Yes, exactly. The maybe this is what V2 will bring. It's a minor annoyance to have always some ETH and always some USDC for most trades, whether you open or close them, especially buying. You need to have a little bit of capital, and your fees that you collect also on both sides. So if you've been trading for a while, you see both balances go up as a seller. But yes, you have to start with a little bit. But yeah, no, I may be a user of that in situ hedging, where you buy puts to offset a lot of your ETH collateral.
Yeah.
Or if you're trading in ETH, Bitcoin, ETH, whatever shitcoin pool, you could also buy these puts to also hedge the token side.
Yes. Okay. Well, let's jump to the final trade, the best trade on Unichain, and I think you were saying
Another
a
call.
short call, right?
Yeah, another short call. Let's do this.
Hey, call seller. We will see who the best is. So you
Ooh.
got half of the trade right.
No.
So
Yes.
you're at 2.5 out of 4 for today's prediction. Not bad, over 50%. But the other leg
Ooh.
is actually a long put. So what kind of a strategy is going on here?
Yeah, some people call this either risk reversal or synthetic short. We call this a short perp, but it is kind of creating that straight line that's a lot like a short. And so they close it. If you go down a little bit, yeah, they opened it within the next 2 days. They closed it with a tiny profit. So again, that's fine. I don't blame anyone for securing profits, but I'd say that the price might have been even better if they close it at 19. Can you hover to 1900 price now? So they made $18. They could have made maybe 50. So, but that's fine. They anticipated this. They secured a win. But yeah, this is like shorting an asset. This is like a short perp, exactly the one-to-one type of return you see. And yes, price went down. Now the money is made on the put that's purchased, mostly because the call is out of the money. But yeah, I'll take this as a win too.
Yeah, and how this is showing a 22% gain on the $18. So how is this being interpreted here?
Yeah, so I think it's the collateral requirement. So they make 18 out of 160. That's it, right? 20%. Yeah, or
Or maybe this position requirement has changed since it was
yes, maybe so.
created.
And again, they are controlling have a need of collateral, and then that 100% delta will be they lose like 0.6 or 0.56 dollar per price going up and gain 0.456 going one price going down. But yeah, we do have maybe to revisit some of the percentages. But yeah, the it seems like $18 a very good deal on a $160 worth of collateral commitment. But yeah,
Why is the collateral requirement so nice on this? It's very small. This seems like a very capital efficient position.
yeah, I think it's the yeah, no, the call should be 20% and the put should still be 10%. Maybe there's something. I'd say that the collateral requirement is a bit higher. It seems like they have a 10% ish or maybe 50. Yeah. Anyways, the you yeah, internally I'd say that should be a 30% buying power requirement. 10 for the put that they bought, 20% from the call that they sold. It's not like a defined risk strategy, which is totally netted. This one has,
Oh, okay.
I'd say, higher requirement than the call option because you're buying as well. So, yeah, we can send this to me and I'll try to look at the math. But yeah, I'd say it might be a bit wrong on the collateral side requirement.
Okay, but still, they're getting at least a 3x.
Yeah, exactly.
On this position, so they're close to a full delta, right? And so if the price drops, what is this? $60 on 2,000. So the price drops about
3%. Yeah.
3%, and then so they're getting maybe 9% or so gains on this, right?
Yeah, on the collateral that they need to kind of secure and have in the protocol.
So definitely a big win here, and they didn't even have to pay for the option for a certain point here.
Yeah, exactly. And if you look at the premium chart, I have to say that the oh yeah, no, yeah, they were in the range all the time. But yeah, anyways, that's
right there. The premium chart going back up. They earned some money on the
yeah, and then they could have held it a little bit, but yeah, otherwise this is a good trade. There's nothing wrong with making money there.
So this is like a positive positive funding rate. Long's paying the shorts.
Yeah, positive funding rate on short perps. You don't see this often, but again, part of my tweet, there's a lot of instruments, a lot of inefficiencies, lots of ways to profit. Here, it was negative most of the time and a little bit positive, so it nets maybe a lower negative rate. But yeah, there is like 1,000 ways to skin a cat type of thing. So
sweet.
Awesome.
Well, thanks for going over that. You got a good score today, and I think we learned some valuable lessons on how the puts and calls are working in this kind of bearish week that passed by.
Yeah, and again, the price goes down, you'll see the put buyers and call sellers, and now short perp traders make money, which is kind of again, the may seem overwhelming, and there might be like 25,000 different ways to trade. So that's why we do that show. But we also have like, we can open up a question Discord, Twitter. If you have questions, feel free to ask. And yeah, the versatility and the ability to do exactly what you want and create the payoff you want is what attracts me so much to options. So that's again the one thing that may seem overwhelming at first, but once you understand and get, it's very very a good way to control your finance and your your trading for sure.
Sweet. Well, make sure to follow us on Twitter for more updates on live streams. We have some live streams coming out every week around the same time, Monday, Wednesdays, Fridays, and also Tuesdays. We have a special research episode. So stay tuned for that. Follow us on Twitter at panoptic_XYZ. Nothing we can say here is financial advice. It's meant for education and entertainment purposes. Please do your own research and have fun exploring the options trading world. So anything else from your end, Guillaume?
Trade safely. Sometimes the markets are very, very active during the weekend. And yeah, we'll see if the, again, macro guides a lot of it. But yeah, I don't know if they still hold the tariffs deadline / implementation
April 2nd,
date.
Liberation Day.
Oh my God. But yeah, maybe if there's an announcement, either ways, that could shift the markets over the weekend. So again, don't put all your eggs in one basket, but trade safely, regardless of how the market moves. So
or buy the volatility. All right.
Maybe yeah, perfect.